when a market breaks out, two things can happen. You know, it can either break out because stops have been getting hit. So the short traders, previous short traders, are bailing out of the market. And so the market this rally is produced by them scrambling to get out. So in that case, they're not putting anything into the market, but they're taking away. So traders are coming out of the market. On a true breakout where traders really want to get long, you're going to see new traders come in and new money come in, and that's the difference. In Forex, in a pure Forex market, if you can get access to order flow information, or perhaps talk to somebody on a trading desk, watch, as we start to get more and more technically advanced in the Forex market and start to get really true volume numbers, you'll be able to learn how to read whether it was stops getting hit or not. Now, I don't think it was stops in this case because these are daily charts, or 1440-minute charts, and that the market shorts have had plenty of time to cover their positions throughout this. And this was going into, this action here was all about the European summit. So I don't think really there were major positions. People were waiting for something to happen and then going with the move. Okay, so that's one thing that you want to anticipate, is read how the breakout was made. Was it news driven? Was it central bank driven? Was it stops? You have to kind of get that read based on risk on, risk off type scenarios. For those who are new, risk on would be a day that traders are looking for higher yielding Forex markets, or higher yielding markets in general, commodities and stocks. That would be a day where the dollar, US dollar, would be under pressure, and say commodity linked currencies like the Canadian dollars and the Australian, they would attract more demand or more buyers. So if you come in and you know what the theme of the day is, okay, then you could be prepared for these breakouts. Trading a report or a summit like last week was difficult. It was difficult because nobody knew when it was going to come up, and so traders had no choice but to move sideways. And what does sideways in this alternation of red and green mean? It means uncertainty. They're humans. They're just like everybody else. Not everything's a computer generated trade. Sometimes decisions have to be made, even in terms of most often in terms of quantity. If you see very limited action, the market's not going to move. There's uncertainty, but once clarity comes in, then traders should take advantage of it. So this type of market, the uptrending or the ascending triangle, is the one that's going to tell us that there's an impending breakout taking place. Okay, now with Autochartist, what I've done here is you can see a list of all these stocks, or all these Forex markets coming up here. Okay, tremendous list. I know you can see that this signal was, say, stale, a little bit stale. That's December 12th. Same thing here on this triangle formation. So let's move on to some other data that's more present. You can see here with this orange marker here that this means that there's fresh trades coming up. Okay, sometimes I start these webinars where I slow down a little bit so that I give the markets some time to catch up and form a pattern before going into it. But let's take a look live and see what Autochartist has come up. You can see that there's some action going on in the market within the last 24 minutes because all of these indicators have come up. So while I was yapping away here, these indicators were going up. You may not have been able to hear it, but I heard it in my earpiece, and I could see these buttons coming up. So right now you could see that as a clue, if you're going to trade, what do you see here? You see the euro, and you see the arrow up. So it kind of tells you, you see the euro going up against the dollar. You see the New Zealand dollar going up against the US dollar. This kind of tells me that there's pressure on the US dollar. Okay, so to cut to the chase, early in the morning when you wake up, you want to take a peek at, if you're in the US, you want to take a peek at what's going on in Germany overnight. You know, those are the kind of things you look for. You want to start to see, is there a theme? Is the dollar getting beat up today? You want to look, if you're trading New York, it's a good time because you have overlap. You have the New York volume, you have the German volume, and you have the London volume. So you have plenty of trading opportunities in volume. So you want to watch that overlap. You definitely want to trade that first hour or so of trading in New York because you're going to get reports at that time. Now, as the market develops and we start to approach the Europe close, then of course you want to slow down your trading because most likely these traders over in Europe are trying to maybe lighten up their positions, their day trading positions, maybe curtail trading activity. I would say that people, if you're trading near your close, then basically your market's closed. In other words, U.S. close at like 3 in the afternoon. You're basically chasing after some money, or maybe you had a bad day and you're trying to play catch up. And that's the same with the European traders. If you're trading U.S. starting at about 7 a.m., you should be able to do well in the morning because there's action. But as you start to approach that European close, things start to slow down, and you know out there, I'm sure a few are shaking their heads, they know how many givebacks you have or how much money you can give back during a slow time period like that. So pay attention to where those closes are internationally and where those opens are so you can exploit them. All right, so what I'm basically saying in a roundabout way, trade near the openings, around the openings of the exchanges. So follow the sun. If you need to, go look at Japan, Australia, work around the clock, and also know when these markets take breaks. So in the U.S., starting at about 11 o'clock Central Time, we start to slow down because of the New York lunch period, and then 12 o'clock is the Central Time lunch, and there's just not a lot of action going on until after 1 p.m., and then traders start to trade again, especially since the Fed window will be closing. So we do, as an analyst and as a trader, I recognize that I put a lot of work into identifying patterns, but again, most of the time, it's not the pattern itself, but when you trade it and if there's other traders there and volatility. So let's take a look at what's going on here. In the Euro, it's a 30-minute chart and it's a triangle. I know so it really doesn't look like a triangle yet, but if you project it out over time, believe me, these lines are coming down, these lines are going up. That's going to look like a triangle formation. All right, so let's switch to MT4 since this is a fresh trade. Let's see what we can pick up under these same parameters. This is a 30-minute Euro. So I'm going to go to, where am I going to go? There I go. Let's look at this Euro. And oh, that's an hourly, by the way. And of course, for those of you scoring at home, if I see it on an hourly with Autochartist, there's a really, really good chance that it's going to be on the half-hour, 30-minute chart because it's the channel. When a channel forms, for example, or a triangle forms or channel forms, tends to be there tends to be a pattern. So what we're looking at here, as you can see, there is nothing up here, and the reason why there's nothing up here is that I am going to show you guys how to load the program. In MT4, it's simply drop and drag. So you can see I can identify chart patterns, Fibonacci patterns, and key levels. So I want to move over into here, and I want to see if it can read it on a 30-minute basis. Again, I work with different data streams, so if it doesn't come up, doesn't mean anything's broken. It just may mean that I'm not working with, the right data stream right now. All right, so the box here identifies it as triangle 31. If I switch back to here, to this web program, this is a different length. So I'd have to see, what comes up. It looks like it's not picking up the short-term trade, but on this one here, it could be because of the data delay. But let's take a look at what happened here. All right, what happened here was when you have a pattern on Autochartist, on MT4, you're going to get, you can control these colors by changing them, of course, but it's the same principle except it's live data. So in here you're going to get, like this one, a triangle formation. You can see how this triangle looks pretty clear. If you extend out these lines, definitely you'll see that they're going to be across in here, and that's where the market began to move. Now, when you see a pattern like this taking place, and again, it's going to predict this impending breakout, okay? Autochartist again gives you this zone. But what it does is, on MT4, you could see that this zone has a shape, and it has a time period. So what Autochartist is saying is that if we break through this support, we can hit this zone anytime inside this time period, and it'll be deemed as a successful trade as far as Autochartist stats are concerned. Okay, but as a trader, you want to know a little bit more than that. You want to be able to know if we break out, you know, what's the potential give back or risk versus what I can get. So some markets on breakouts start out slow. So you could see that even though this began to break out, look at the breakout rating 1. You had 1 box. So because this market here broke out very slowly, you know, it didn't you didn't have a lot of conviction on that breakout because, again, on the date, if you look at the date, the 9th, it was still that summit day. So the first time through wasn't a lot. So as a trader, though, you know that sometimes you have to burn a trade. Doesn't mean a lot that your system's bad, that you should switch indicators and switch analysts and everything. It's not a panic situation. What it means is that when you trade momentum, if there isn't momentum to start and you're trying to make momentum come in, well, you're going to get retracements against you. What you want to do as a trader is you don't want to hang on to these things thinking this is the last trade on earth, okay? Because if you start to say, well, I'll just get out if it goes over this point, then what you're saying is you turn that momentum trade into a swing trade and you screwed up your risk-reward ratio. So if you want it to go down and it starts to show green on a candlestick or starts to go up, best thing to do is get out and reset. If this market is truly going to go down, and in this time frame that Autochartist has identified, you can continue to beat on that breakout point, and sometimes 2 or 3 times. As long as your losses are small, you can do it. Once the market does confirm and finally does break down, then the trade has to become manageable. You can see that 3 quick moves down means that there's conviction behind it, especially with the size of those candlesticks. And then you start to see this green sneaking in here. That should be your early warning, but not necessarily mean get out. But it's an early warning that momentum has slowed. And then as it develops again, now you start to see the momentum pick up. Now with Autochartist, it gives you the target. You want to read it, whether to hold on for additional break or if you want to trail, or if you want to put more on. So these are these identifying levels. All right, now let's go back here and take a look at this other chart here. All right, you can see that on this one there's a breakout of a triangle. All right, momentum was strong on the breakout, so we're expecting a follow through, and it looks like a quick target price. One thing you want to watch is as you're breaking this price here, you always want to see if you're breaking a top also. So you want to have 2, you know, to me the best systems combine 2 independent or 3 independent ways to come up with a key level or something that tell you that breakouts are taking place. So what I try to do with a pattern like this is if I see that the breakout's going to occur around the 130.27 area, then what I try to do is I switch to a program key levels, which Autochartist also uses for breakouts. And I'll go to FX majors. And I'll take a look and I'll see if Autochartist has come up with any indications that key levels were taking place. Since we are looking at the Euro USD, I've selected this Euro USD under key level. So all it's going to do is look for the Euro USD. You can see all these patterns. When you get these gray areas here, they've already taken place. So Autochartist breakout was originally here. This is just stale data. So that was from earlier this morning, about 7 hours ago. Let's take a look at something here and see if Autochartist at key levels had a forecast here. All right, yeah, it's interesting. Here, it was showing that there's resistance, okay? And that was about an hour and a half ago. And it was saying that resistance was coming in around 130.43, okay? That was what was going on at that particular time, all right? And that was a 30-minute chart. All right, so now what we're going to try to do is when you see, you can either go to key levels and look and see what's happening on these emerging patterns, and you can see that there's a price level identified, and then you can go back to chart patterns and you can look at that 130.43 area, and you can go to these FX majors again. Let's see where that's at. Just take a look at this. And you can look at that 130.43 area, which we're at right now, and you can see if is the market hesitating there, because on one pattern we could be seeing it as resistance, on another there could be a breakout, but then you have to wonder, why is that market stopping? So sometimes the resistance of the key levels is stopping the market on the chart patterns. So you want to kind of work those two together, see if so that you're getting a rhythm, so that you're not buying into resistance on one chart pattern saying buy, the other chart pattern saying you're at resistance. So you want to try to get everything in sync. You want to look for patterns that are points in the market that are showing breakouts on the key levels, as well as breakouts on the chart points. Okay, let's look at this 15-minute triangle here and see what's coming up. All right, well, that's of course going to show the same thing. It's just double. You can see 55 times 2 is 110. So the time period, half the time period, double the length on that. These are non-trending patterns, as I said. I can create this list of non-trending patterns just to show you real fast. I talked about it. When I go into advanced search, I just come down here and I just select triangle or pennant, and all these patterns come up that I'm looking at for triangle formations, ascending triangle, descending triangles. So you know why I made this category non-trending, because I want to cut to the chase. I want to see the markets that are forming breakouts. All right, so since the euro is strong against the dollar, I'm assuming there's some kind of a trend going on. That too is a stale market. So let's see what else fresh is coming up. Now here's trending markets. Okay, 8 o'clock New Zealand dollar versus U.S. came up on a 60-minute chart. These are falling wedges and channels. Okay, it's because there's separation between the two. Okay, you see that a wedge actually carries the characteristics of a channel, meaning that these lines, the traders are trying to keep these lines parallel, but there's a little bit of a narrowing going on. Okay, so it's not necessarily, you know, that scenario. So a wedge carries the characteristics of a channel and a triangle. And so eventually you can get a breakout also. So you can see that in this trending pattern, out of this trending pattern, there's a breakout to the upside. Breakout's about average, so you're looking for it to pick up some steam so it can hit that target price. So it looks like if you come in and you say the theme is the dollar's down, you immediately start looking at the bullish side of the Forex market. You start looking at the euro. Is it a euro-led rally? Well, a lot of times Autochartist will show euro as being maybe populating the list of euro trades. If it's risk on, if you start to see, if you wake up and you see stocks up and commodities up, then that should tell you that the commodity-based currencies like the euro, Australian dollar, Canadian dollar could be attractive buys today. In this case, you got a good breakout forming and the target zone. The thing that you want to watch on channels is, because this is wide usually, this resistance and support, a lot of times the rally into it is tired, okay, and so it doesn't have the power to go through. With triangles, because it narrows, you're looking for momentum, and you want